Welcome back. Well, we have to put some more derivative strategies on the table as well. And Amit Gupta of ICICI Direct joins us. Good morning, Amit. Happy Holi to you. And what's the trade today?
Good morning and happy Holi to all of you and the viewers also. See, from the Nifty heavyweights, we are picking ITC because I think after a long consolidation now, it's due for a breakout. It is due for a move towards 320 levels. Now, first, trigger for this move is started when in this recent Bharat 22 ETF, the government did not disinvest ITC, and that is where I think from the valuation perspective, the thinking started coming that it can possibly go up, and only then any sort of disinvestment can come. So I think this is where we started seeing the closure of short positions. So it was very high. I mean, this is one of those stocks where whenever it used to come near 290, 295, the people used to go short, and whenever it was coming down to 260 or 65, then that particular short covering used to happen. But now at these levels, we are seeing almost 10% closure of short positions. So my sense is the stock now is heading for a breakout. So this is one of those which can support Nifty in this particular move. So buy ITC, and I think another 10 to 15% of move is very much there on the cards. From the mid-cap space, Karnataka Bank, because mid-cap banking, particularly mid-cap private banking, is seeing a very good inflow from the FIIs. FIIs every day they are investing around 2,000 to 3,000 crores. And if you look at Karnataka Bank, for the last 1 year, it has not been able to give a breakout above 128. In March 2018, it had a level of 128. Since then, now it has been able to take out this. In fact, what happened in the last quarter, the results were not good. And that is why there was heavy shorts again near these levels of 120 or 125 we saw. But the stock did not fall. I mean, that was the first, point of action where I think the shorts became vulnerable because the stock did not fall much. And now it has started moving above 128. In fact, yesterday closing was close to 130. If you look at this month delivery, I mean, in fact, last 2 weeks delivery, and you compare with the last 1 month or the last 1 quarter, it has been very steep. So people are buying in cash. And if you look at the positions in F&O, particularly in futures, there is a good trend of short covering we are expecting. So still that short covering has not started much big. It is only 2% of closure we saw yesterday, but it is going to be big looking at this buying in the delivery. So my sense is the stock can move towards 152 or 155 kind of level. So from the mid cap private banking, this is one that we are choosing right now.
Okay, well, Amit, thanks a lot for joining us and giving us all of those F&O cues. SP Tulsian of sptulsian.com also joins in to talk about the latest in terms of individual stocks as well as his recommendations. Mr. Tulsian, good morning. Wish you and your family a very happy Holi, and thank you for joining us on the show. First up, I wanted your thoughts on Jet Airways. The stock price is being held around these levels. There's no major collapse coming in. Do you think there's going to be a white knight coming through for Jet, or would you lose the faith on this one?
Sonia, again, wish all the you all at CNBC plus all our viewers the happy and colorful Holi, and let's bring prosperity and all brightness in the life. Now, coming on the Jet Airways, in fact, if you really see the situation, I think it has been, though the things, the pace seem to be quite slow, but I think the things seem to be panning out very well. Let me just say that the two promoters, I call Etihad also as a promoter, though they are not in the promoter category, but they have been, strategic investor holding 24%. And if you explore the possibility of these two promoters continuing, maybe with on the revised terms and all that, I think that was the most immature way of taking the things forward. Now, Etihad having expressed that they wish to exit, and that too at 150 rupees, that's an excellent move. Now, again, in case of Naresh Goyal, who is holding 51% stake, we all know that he is going to get shrunk maybe to 15%, 20% or whatever it is. And although it is very surprising that his 51% stake has not been pledged, I know which should have been pledged at the earlier level itself. But anyway, now these two promoters are seen in the process of moving out or maybe getting shrunk, to less than 20%. Now lenders will be converting major portion of their debt into the equity. So all these things leads to the new promoter scene coming in who may not be requiring the money, because if the bankers have an exposure of about 8,000 crore, and even if I think they get a haircut of maybe about 30-40%, they will really be very happy. So you take the EV of the company, which I have been all along saying that if you take the present market cap of 2,500 crore and 8,500 crore as the loan, which can get settled for about 5,500 crore, you are getting the whole company maybe anywhere between 9 to 10,000 crore with an EV. Top line of 25,000 crore, very good infrastructure. I am not worried on the grounding of the aircraft and all sort of things, but yes, the worry is non-payment of salary, which is seen inhuman as well, because employees have not been paid for 2-3 months. So maybe yes, once the Etihad having agreed now, of exiting from the company, definitely the process by the lenders of finding out a new promoter, new buyer will all be seen explode. And in fact, the insiders are all talking that 2 serious players from the country or from India are seen to be interested, apart from maybe Qatar Airways, which is all in the public domain. So yes, that is seen to be a positive development, and I am keeping hopes alive on the Jet Airways. And in fact, if you see, in spite of all this bad news, share should have fallen to a level of 150. If we get an indication that Etihad is exiting at 150 every day, practically 60% of the fleet having grounded, but we are not seeing that happening. So yes, the things are now seen, at a climax. And maybe the solution will get found out maybe in the next 1 week or so. And if I see the settlement with Etihad exiting at whatever rate, at 150 or maybe even 200, that is seen a positive, then the next situation will be to start exploring the induction of a new investor in the company.
All right. Mr. Sen, good morning. I wanted your thoughts on IndusInd Bank, which really perhaps has been the stock of this month, up 17%.
See, Anuj, actually, if you see the Q3 numbers, I don't think that there was any kind of disappointment. And in fact, the kind of corrections which we have seen in the share price of IndusInd Bank in this last maybe post this Q3 numbers, having corrected by about 200 rupees or so, was unwarranted. And in fact, the kind of surge which we have seen in other private sector banks, mainly the bank nifty constituents, maybe like Axis Bank, ICICI Bank, or maybe other banks like I'm not including HDFC and Kotak, because they have always been the favorite of the FIIs and all those things. Even RBL Bank. So yes, the catch up was expected to happen in case of IndusInd Bank, and that is what is seen happening. And even now the share price is about maybe 15% away from its 52-week high, maybe which was at 2,000 plus, if I'm not wrong. So I think that kind of catch up was seen picking up now. But maybe in the near term the share should take a pause. I don't think that you can see one-way rally of beyond 15% in one go, which we have already seen in just last 1 week in case of IndusInd Bank. So yes, still upside is seen over a medium term, maybe over next 6 to 8 months. But for the near term, I think the share should take a pause.
Good morning, Mr. Tulsian, and happy Holi to you as well and to your family. Sir, I wanted to ask you the other stock, actually, Axis. They've had an analyst meeting yesterday, and almost everyone has come out and given a buy and spoken about targets of 850 and 900 rather freely. You think, Axis has run up a lot.
See, Lata, again, this is usual phenomenon that, I'm not trying to criticize the expectations and all sort of things. But when a stock starts moving up, yes, we all go gungo, and when it starts correcting, we all go extremely pessimist, on any stock or any sectors. I don't think that's I won't be accepting the call of 900 rupees on Axis Bank going forward. I think whatever has to happen. In fact, now you should really wait to see the 2-quarter numbers, with the new leadership having come in as a CEO and MD, so allow the banks to perform, show the asset quality, show the credit growth. Two things are seen to be very crucial. I'm not worried even if the NIM gets shrunk, maybe by about for 10, 15, 20 basis points. But the two things are very important: asset quality and the credit growth, mainly in case of Axis Bank, because the kind of behavior or the financial results which we have seen in last 1 year or maybe last 6 quarters, practically these two things were seen missing. So I won't be taking a near-term call. In fact, we are keeping extremely positive view. Maybe if on a relative basis, if I compare Axis Bank with ICICI Bank seem to be having much more value going ahead, in spite of that stock also having risen to a level of 400 rupees or maybe 52-week high.
Okay, Mr. Tulsian, I also wanted your thoughts on how to approach the auto ancillary guys, because yesterday many of them told us that they will be also cutting their production by about 8 to 10% in line with the OEM cut, and the demand would fall further from April 2019 because of the new costs, you know, the emission norms, the ABS costs, etc. Do you foresee further downside, or is this a good time to be buying these names?
See, Sonia, it is always the case that if you see the OEM cutting the production, you will see the fall in the production of the auto ancillary also. But generally, by and large, more than 50%, or maybe I would say that more than 75% of the auto ancillaries, they do cater to the replacement market as well. So if there is a cut of 10% in production on a ballpark for any auto OEM manufacturer, then the cut in the production of the auto ancillaries may be 7% or maybe 6%. So that advantage always exists in case of the auto ancillary, number one. Number two, if you see the 60-70 stocks, you know, ruling in this space in the listed space, majority of them are ruling at a very cheap valuations, maybe in the single digit P multiple. And I don't subscribe this theory that from April the things are going to, the auto sales may not go or may deteriorate further because of the emission norms and all sort of things. But yes, maybe keeping that thing in the view, you can be a selective buyer. In fact, earlier, if you recall, auto ancillaries have taken a beating on the fear of the electric vehicles seen coming in, and in fact that fear is now seen having receded, saying that the things will not be seen impacting them at least for the next 2 to 3 years. So we are keeping cautious, we are keeping positive views, maybe on a mild positive views on a select basis. In fact, there are many auto ancillaries, as I've said, that they are ruling at a single digit P multiple, and we find good value because majority of them have started catering to the global players also, which is also seen an advantage. So yes, catering to global players as well as a replacement market are always seen to be the cushion for the existing auto ancillaries, and some of them are really looking very good.